you guys see the screen?
Yes, sir.
Okay. So I kept thinking there was going to be one more correction in the dollar down to 94 or 94 and a half, and doesn't look like that's the scenario here. So although Euro pound may have, bottomed at in there 78.6, I tried at 61.8. Anyway, here's the weekly on the Euro. And coincidentally, this 1320 level, which is right where the 200 week is also some bulls lying in the sand. They were saying, if it didn't break out back under 1320, you could assume that we're on our way. I've seen counts as low as 105.80. I'm going to have some super bears on. They're going to be talking about probably par. So the Euro has pretty good downside potential on this breakdown now. So finessing an entry. And I've had this line drawn for a long time of these two lows, thinking there could be, a third drive down here. And, it's coming in around 108. And I know some guys that are looking for this gap. You see this gap here? Sorry, my hands are shaking. But that was the French election when Macron won, and it was, breakaway gap and never looked back. So some people are looking for it to be this deep. So also, if you just took it like, call this, a pretty good down wave, and then call this a flag, that's 6 cents, right? So for under 1320, that's 107.20. It's down here. And the only thing that would change it would be back over this week's highs. And I don't know, look, I've been humbled so many times. Anything can happen in this business where, now that it looks like it's on the verge of a breakdown, it could, finally give the corrective leg. But I think it's pretty doubtful. Ever since the 1550 false breakout, I kept thinking there was going to be a rally, and, this was a false breakout, got everyone long. Okay, so, if we get some type of rally back towards 1440, even this week I was looking for just, 1460, had some confluence on some moving averages up here, had this on the 1 hour, and, there's not even much divergence here. So it's hard to be bearish a dollar, is the bottom line, isn't it? And, you would think it would be hurting the stock market. And so far, the market had a phenomenal week. But if we're going to 108 in the Euro, I think it'll bother the stock market for at least a correction. Because there's nothing so far showing up on the 1 hour. There's no divergence. Okay, so I probed just on a, measured move, and, some of the things I read from a few other guys, and 2670 was a range, and NASDAQ, a potential resistance level, and we talked about that last week, and right around here, the 6800. So, it wouldn't take much for a NASDAQ to turn bad. Are we going to go to 69.85 first? I think that might change the picture if that happens, but it's possible. That there's no guarantee that this is the high. But if you look at this uptrend, it kind of has a wedge look. Scott's going to say it is a wedge. I just can't find return lines that make sense to me to make it look like a wedge. So this is the only line that made sense to me. And I would say, if you want to wait for something negative, I would say NASDAQ back under 6,600 would be negative, or even the line, which, is not exact, but 6.5. So that could change the trend. And I'm reading from some of the people that I talked to that some of the indexes will only correct, that there's a difference right now between structure and S&P and NASDAQ compared to Russell. and some other things that, the lows are in. You could get deep retests, but these are the only two that, open the door to some type of flash crash or something in the markets and equities. I have to think that it's going to be domestic political things. I mean, things keep heating up. It's been a long time. I think things are coming to a head, domestic politically wise, with, what's going to happen, at least a challenge, if this, story continues. And I don't know, I don't know how he does it. I'd have a hard time standing up and just, going on day to day with everything that is, being said or potentially hanging over your head. I get nervous if I have a traffic ticket, so one thing I have to admire is how, he holds up under pressure, because I'd be crying mommy right now. How about you guys?
Amen.
Would you be, I just think about those things too. And so I think that, something's going to happen in February. Remember, I talked about the February break because, we weren't, Scott did great, riding some long stuff here, but we weren't bearish down here, going into the end of the year, not bearish. And we're looking for retracements. A lot of people tried it early, 26 and 2640. And, right here, there's no reason to think, it's a top, unless you believe in lunar eclipse, like some lunatics I know. But at least we're patient. We were patient to, begin to nibble at bearish positions. Don't bet the farm on this, but, maybe wait for some more divergences on shorter term basis. Maybe it pulls back and then, it's still allowed to go up towards 697, 27 even, 2690. So I think we're close if we're going to turn. And we talked about the markets all being good until the end of January. So we're not quite there with the halfway mark, but I'm still looking for a February break. I don't know if it's going to be. I think the dollar is the key, and what can hold up with a strong dollar. Normally, the stock market doesn't, right? The crude, from January. I mean, maybe it's close to being done. Maybe it's another buck or so on the upside. Like you were saying, Scott, 55, extreme 58, but. And what was parallel with, so the dollar is negative for crude, and if crude, I'm not thinking crude will go to new lows, but maybe, back to 48 or something like that, possible, after this correction. Gold, what's gold going to do? The shares look lousy, the bullion doesn't look terrible, but, this is going to be an interesting test, an important test if I'm right about the dollar now and the euro eventually breaking down under 113.20. How are the metals going to act? And again, there's some disjointed counts where some people are bullish the bullion, but not yet bullish the shares, which, they're looking like Paul brought up Avi's 16 GDX number. And, I could see how that could happen. Other people are saying, the XAU wasn't complete, that it needs one more low. So what might happen here is the gold pullback is not dramatic, but the shares maybe get hit because they're stocks and they need one more washout. I'm talking gold shares now and silver shares, which, if you look at them, go ahead.
The one thing with the ETFs, the contract periods aren't necessarily reflecting when we have significant moves. Like we've moved this $100 in gold, but for example, Nugget doesn't necessarily reflect that because it's rollover dates. So that's, one thing I've been watching is ABX and GG
Hmm.
in comparison. If you're looking at trading in equity versus the futures,
Right.
I think GG has the highest correlation.
Okay. And weren't they just absorbed by Newmont?
Yep.
Yeah. Have you seen that affecting the way it trades or anything? I mean, is it going to,
I,
if they're absorbed by Newmont, is it still going to be an issue you could trade?
I don't see why that would affect it because their
Okay.
holdings are still the same.
Okay.
I mean, it's their correlation to their currency holdings because
Okay.
they're heavy in Canada.
All
At
right.
least that's my perception.
Yeah. So they're not going to, sometimes when these miners take over a company, the name goes away. Like, Home State was around for 100 years. I forgot who bought them, but, it's not there anymore. It was absorbed. And that's a good point. And, I have the ultimate experience with decay in, TVIX at one point. So that's a good point that there's decays in these ETFs, even in the bearish ETFs too, right? I mean, you look at NASDAQ isn't even 61.8 back, but you look at NASDAQ related ETFs and, for example, like
The skew, for example, if we move down to that 1240, which
in the
you're
gold.
calling, yeah.
Yeah.
I mean, that skew is not going to be reflective in Nugget until the next rollover date because
Okay.
they currently, because they hold their contracts, and that doesn't roll over every day or every week. It's
Yeah.
I think they randomly determine it so they can make more money because when for example, DGAS rolled over. I mean, I got killed because I was in 277 on the low side of DGAS on the rollover. I lost nearly 62% when they rolled it over within 2 days.
Wow. God, I hate these
Um,
products. Maybe
yeah,
we
I
shouldn't
mean,
even
so
trade them anymore or
you
talk
got to
about
watch the
them.
rollover. Yeah, within 3 days. Well, they're risky because you have to watch the rollover dates. And honestly, everyone has there's some that are collectively in the same time frame, but it looks to me like they randomly pick the rollover dates based on their flows so they can pull some equity out. That's what it looks like to me. But
Okay. So, looking at, and this is reflected again in things like, where's the quid? Okay. So the quid is like the Qs, right? And here's the SOX, the triple. So it's weaker. It's already 78.6 back. All right, here's the 3 times bearish NASDAQ 100 here, the SQQQ. See how NASDAQ is already, it hasn't even gotten 61.8 back, and this product is already 78.6 back. So there is a disadvantage in all of these. Okay, they shouldn't be investments, only trading vehicles. And maybe without the edge, maybe I'm going to just stop trading them and just trade a stock in a related area instead of the ETFs. You made a very important point today, Scott, about these ETFs, and almost like the deck stacked a little bit, even if your timing is okay. So, I mean, who needs that? It's tough enough getting the direction right in these markets. And having the conviction to hold to targets and appropriate stops and timing. Why should we give the house that much of an advantage? It's tough enough. So I'm glad you brought that up. I'm going to take it to heart and think about it because there are individuals like, you want to trade gold. Scott just gave you one that trades pretty close correlation with gold. This one did too. I mean, AU reflected what happened in gold. Scott, I don't know if you follow it, but it had a great run. It doubled, okay, from the lows in gold at 1160, right, in August. So, doubled. So, I mean, it looks a whole lot different than Nugget and GDX, right? I mean, this one's already proved itself. Maybe GG's like it too, but, I I would love to buy this when I see the GD. I'd like to know where this one's at. And gold stocks not making new lows should the GDX trade at 16 this spring. So, just like with the market, I'm using certain things to key off when the rally would be over. The other is the yen close to resistance. Now that it's 110 and the yields, okay, so yields have corrected pretty good. I thought they could go to 295, but maybe not. So, where are we? And I think crypto's acting pretty good. I like how crypto's acting, actually. So, oh yeah, here was the Euro trade. So I tried it to 61.8, got stopped out near the low, and then turned. So I know this one still could be, if you don't succeed the first time, try again. I may again if I get some setups down here. Maybe this works with the dollar rallying and, all the optimism in cable compared to Euro comes out, because I know people talking under 120 cable, under 120 cable. So this reminds me of crude. I got stopped out one day before it turned. So tough enough here. I'm just going to go small on initial entries and scale in. Why not scale in at 61.8 instead of getting stopped out in there 78.6? So that's my dunce hat lesson for the week. Well, we were talking yields. So yields up again this week. I think this is just a ghost candle, but we're almost near 38%. I thought that maybe, if the market's really good, we're going to go to 295, but market rally, yields up, right? Yen up, US dollar yen up, yields up. But even if there's higher levels to go in yields from this 38% level, why can't we pull back here? And then go again, kind of like ABC, and then
It's
B.
never a straight line.
Yeah, maybe a B back here. But if there's a crash, this could be it. I mean, this is an important pivot, isn't it? Look at all these lows here at this 280 level. And, the weaker the retracement, the more bearish this is, which means yields could really collapse. So this was 55, 3/4 of a point here, 71.10. Yeah. So you could see how you could get, an equal move from here would take you down to, the low twos. And that kind of implies risk off, doesn't it? And the yen, and the yen doesn't go all the way back down and take out its flash crash low. Maybe it, but it retraces to, 106 again or something like that. And Aussie doesn't take out its flash crash low, but a correction into that big range day happens. So that's what I'm thinking here. So yields, we've had the bounce in yields, we've had a bounce in the yen, we've had a huge bounce in equities. So I'm thinking yields are close to peaking up here, or either just just go from here, or just like the market, we get a
Maybe tag the 50-day.
We could, yeah. I mean, that's the 50 days 286, halfway back's 290, 295 was if we don't have a bad February, I think we're going here. But why not just like the market could in certain indexes just correct the up move that it's had? Why can't yields drop again from here for a B and then get something like this from 265? That would take you up here. Okay, but I would.
What you would consider a bad February. You said if we don't have a bad February, it's going to go here. Define that.
A new low in S&Ps. Taking out the December low.
Okay.
That would be a bad February. Okay, and the catalyst, I think, for a bad February is a good February for into the spring for the dollar.
Okay.
Okay, so I think it's a headwind. for equities. Eventually, correlations break down, but I think it's going to be a problem because the dollar is, it goes up, it deflates the balloon, it goes down, it inflates the balloon. So it's been moving sideways forever. If the euro's breaking down under 113.20 and we're going to 110, 108, 106, I can't see that being a big positive for most markets except, bonds. Being short the market, being long the dollar and bonds and short the market, and set up one more washout in gold shares and a correction in gold to buy. Probably, all of this in, March. I'm thinking I keep talking to people who keep talking about March. A lot of important cycles due in March and April. So I think a lot of things that are going on now are, probably in their last phase, but it could be a dramatic phase, like, 102 in the dollar would be pretty dramatic, I think, because people are going to be real worried about the dollar taking out 104 and what that means. And, I'll have a guy on Friday, I think he's looking for 120. And I don't know, 95 euro, 85 euro. I mean, Henrik Seberg is the biggest bear I know. So, and Peter Goodburn's going to be with me on Wednesday. So, a pretty good lineup. We could we could just stop now and wait for the interviews next week. What do you think?
Interviews are the best.
What? Call me Mr. Cliff Notes. Anyway, so I mean, these are some of the things I think can happen, and the dollar's the key, and we'll see. So we should be looking for shorting opportunities in the yen on a risk off. So pretty good recovery, right? And we're approaching some levels, and unlike the S&Ps, at least the yen is still diverging on this time frame. Let's see the one. Yeah, starting to diverge here. So I'm thinking sometime next week there's a good short coming up in the yen, because this should be, come off with yields. But even if we have a flash crash, you see this tail, maybe we pull back to, 107, 106 and not make a new low. And the same in Aussie, that it pulls back maybe to, where it was supposed to stop in the first place before this, around 69.25. That's, well above this low. And so if that's going to happen, here's another candidate to watch, which is a classic risk-off pair. Not watch, let's trade it. The Aussie yen, right? So if we're looking for the end of the yen rally, and this has, been a combination of both, and we're back at major resistance here. Maybe it could make a run up to here, but this should sink pretty good too. Maybe it does what I just showed with the yen and the Aussie, kind of pull back into that spike, right? That this does the same thing. Maybe it pulls back to 74, but that's a big trade. That's 500 pips. Let me just look at the fibs here. So, let's put this on our watch list. Or before I do this, let's look at some shorter term stuff. Oh, look at that. What do you see? 1, 2. Maybe put one more push up towards 79.20 or so. Let's look at the 4. Here's the big moving average. 79.20, 79.40. So maybe one more push up if we get some continued risk on, which I think Scott said, I pay attention to what he said, and he said he sees nothing. Saw nothing Friday that said that, any, bearish developments in the action and things he watched. Nothing was telling him that. So, we most likely follow through into next week.
Yeah, I think so too.
Yeah, so if we follow through, this could be a great shorting opportunity up here, guys. Let's look at the 2-week off number.
And yeah, the only thing that I see as a swan event is whatever Trump's doing today at 3 p.m.
And what's that?
What's he doing?
He's having some news conference at 3 today.
Oh, is he?
Yeah.
Oh, okay.
Maybe he's gonna-
About the wall and the government shutdown.
Oh, okay. So he's going to ruin everyone's Saturday. And there's not even football on. All right. Anyway. All right. Everything's surreal to me right now, my friend. So let's look for something here. Let's look for a third drive. Let's not. I think the best thing to do is, and actually, I'm learning and watching kind of Scott. Scott's really a trader. He may have some long-term views that he, can hold, but you notice how he just goes with the flow, and sees something happen and reacts to it, and in a day or two he's taking profits on an option position. So let's just treat this as a potential 3 drive next week if we get it up here, and give it a shot and take it a day at a time instead of saying, oh, this is going to be a home run ball for a crash. But anyway, it's a decent sell because yen's almost at where I think it should run into resistance, and I think the Aussie is running into some problems too. So this combination should be pretty good, right? So we'll look, and it's risk off in case we do at least get a correction in the S&Ps. I don't think it's an outrageous call. It might seem like an outrageous call to call for the December lows to be taken out again, but I don't think it's an outrageous call to see that maybe pull back to 2,500, right? Where it really accelerated, 2,520, write that number down. It's probably a fib from where we peak. I don't want to draw the fibs because this may not be the high, right? Once I think we have a high, then I draw the fibs in for looking for price reactions here. The 2-week off number is going to be, that's something else you could keep an eye on for a potential reversal. It really has to do some negative things next week. It has to close back under 2,600. Okay, so that's a big move. And then you have the confluence up here. So I don't think you're going to get 2,600 next week, but you never know. You have one bad down day, or maybe Trump upsets things into this eclipse. But that's pretty much the way I see it. Gold, let's just go to it. I almost have more confidence in the call for a new low in gold shares than I do in any call in gold. I know where I should be looking to buy it was, when I was short here and I didn't like the candle and then it broke down. 1265 looks like a pretty good area of interest here. Here's some confluence at 1250. So between here and here, you should be scaling in, and then if we get back under 1240, then we're going a lot lower. So I think 1240 at 1230 is a line in the sand. That's this high. Okay, but just this range right here. Let's include this whole candle. Okay, which was a big candle. It's $22, and say, take it from Friday's close. You could take it. What I was doing on Skype was taking it from 1290, which gave you 1268, right? 22 from 1290 gave you 1268, which is right here, 1265. So these are the two targets, 1265 to 1250. Could be starting to look for the long side. And the other thing that I covered that was a good trade, and I don't see why it would stop being a good trade, especially, it's probably a better short than gold because the gold shares have most of them have a weaker look, would be dust. Remember we talked about the wedge and dust last week? Well, came out, starting to come out of here, right? So here's the daily. Hasn't broken out yet. Last week I said we could go 28, 29. That looks like where it's heading. And if it gets here, it breaks out, wedges could retrace 100%. So this may be a good way of just riding the final. If you believe in a 16 GDX target, which is, about still 400 points away, then maybe the best way to do it is being long dust, probably, even though there's the deterioration and, all the stack deck features of these ETFs.
They have their place.
Yeah, and it's probably better than, trying to short a stock or, options. Maybe an option trade might work on some of the gold shares if you're, bearish like I am on the shares. But this looks pretty good, doesn't it? Here's the, we had divergence at the lows, right? Kind of like a 3 drive. And now it's coming out. So, I'd buy pullbacks in here. Here's the weekly. Oh, yeah, that's because
I started a position in it Friday.
Did you? Okay. It looks pretty good. So, maybe out some of them at 8, but over 28 is going to look pretty good. And, this kind of ties in with the dollar scenario, right?
Yep.
So, sometimes you have to be on the wrong side of the market to know what's the right side of the market. And, I've been, shorting dollar indexes, and it never worked for me, even when the dollar, the pound exploded, everything else. And, I didn't get killed, made money scalping alongside the euro last week, this week, I don't know. But I think the dollar kind of is tipping its hand and will confirm it. A very important number, 1320 on euro, close under 1320, tells you that there could be, 500-600 pips to the downside, not in a straight line, but again, let's keep this picture in mind, which looks
Now,
to
going
me,
back to that euro in that 500 pip range, is there any way that you could just go and stick $5,000 in something? Is there, I hate to go back to a leveraged ETF that does that. Is there, and just let it ride that? Is there anything that comes to mind?
Yeah, UUP, I think.
Okay.
And there's also some euro. My buddy Jim Welsh has traded some, in fact, I think I have it on here. Let's see. I'm not sure which one's a long and which is a short, but I know I have something here.
Yeah, UUP is the dollar, though, right?
Right.
I
I do have something on the euro here. Let me look. It does monitoring one of his trades. Here. Oh, no, that's not it. Oh, here it is. EUO. So it's probably the other. This is the ultra short euro. Yeah, this is the ultra short euro right here.
Right. Cool.
So that's a daily. Then let's see how illiquid it is. Pretty illiquid, Scott.
Yeah. Tight range, too.
Yeah. But it looks like, we could break out. This has been 2.5, another 2.5 from here, give us 27 up here. And you're wrong under the week before low under 24.
Okay. Cool.
So we were there at the end of last year. The euro was 103 at the end of last year. So it may not even get to the new highs. I don't know, again, with all the, hedging and all the stuff they do that, degrades the price, who knows, but that's it. So,
And back to gold real quick for a second. I think you are 100% right. I think when China intervened, it killed your trade. I really think we would have gone to, 1303 at least. But that when they intervened with that first 80 billion on Monday, it sort of toasted it.
Yeah. Well, actually, we got most of the range on Monday. If you want to do a
we weren't, or I wasn't.
Sunday night. Well, it was all Sunday. This was Sunday night. So bought it at, I don't know. Was this Sunday night? Yeah. Or no, that wasn't it. This was it. Here. Bought it at 89.20, and that was, the week's range by Monday morning. And then it did this. And, I came back from the doctors and it looked heavy, but, I just, the dollars, I don't know. I just got out. It was a good trade, and you could have done it on the breakdown, but now we're close to some initial objectives here. Maybe there'll be a rally to get into this on the short side again if we're going lower. But I think the dollar's the better play than gold, and silver's probably should be looking to buy this stuff maybe around 1510 where it turned good, 1480. It's a pretty important area here, 1480. It's going to be a do or die for silver. And actually, let's see, we've had a 50 cent range already. So you take 50 from 1531, what do you get? So between 1480 and 15 should probably be looking for the long side of silver, too.
Cool.
Okay. So that's all I have. Any questions? I think Bitcoin looks better. I don't know if I'm going to get the 3380. I notice even GBTC is acting better, even though it's another one of those instruments. They all suck. The only good instrument's a guitar. I don't know. I mean, it doesn't look great to me, but it could be bottoming. I mean, Bitcoin looks better, the chart on Bitcoin, than this. See what I mean? I mean, Bitcoin, we actually tested on GBTC 78.6 again and held. So, I don't know. It seems like it's under accumulation to me. It's taken too long to get one more washout, which I thought was going to happen. I don't think it's going to happen now. It actually looks like a good long. And stops under, 380, 350 if you want to give it room. Looks okay to me. Looks like we're going to 5.5. And then who knows? But it doesn't feel to you like there's some more accumulation going on across the board in crypto, Scott?
It's pretty consistent. To be frank, I don't watch it because of how I mine. I don't have to.
Yeah.
I just let my miners run and it just keeps building the nest egg, and then I buy my altcoins from there,
Okay.
But the only thing that I'm watching is the Ethereum hard fork,
Okay.
which is going to be hitting sometime in February now.
Okay.
After they found it's going to take them that long to get the fix done. So,
All right.
other than that, I got too much crap on my radar now.
I don't know how you do it. My head explodes just as you Skyping me. So, okay. That's it. Dollar. Paul, anything?
Nope.
Okay, so these ETFs aren't a bad shot down here. If there's going to be this washout, it's almost, Paul, a lot of them are back to levels where, are still even higher than what we were paying in the fall. So, actually, SQQ, it hit 78.6, so we'll see. I mean, it's got to start holding here. But, I look at some of these gold shares and this doesn't look so good to me. It takes out 8, it's going to new lows. Nugget, same kind of setup. It's challenging the moving average, looks like new lows. GDX.
All of them sort of a broadening range.
Stronger, this could have just been a failing rally, and Gold doesn't make new lows, but the shares do, and people just give up on the shares. Gold's going up, and I'm losing money on gold shares. So, and then you look at some of the silver shares, like the one I was looking at, that I know a lot of people that follow me or I talk to, like this First Majestic, and it's 78.6 back. You know, maybe this is a higher low, but sure looks like it's going to wash. And I drew this line a long time ago, guys, and this tells me First Majestic, I'm going to have a chance to buy it $1.50 cheaper. Yeah.
Yeah.
Yeah. So that looks ugly. Almost all the silver shares, Pan Am Silver looks a little better. What's that one? Yeah. But, you know, it doesn't look great on the weekly. You know, we could wash the new lows here. And then you look at the little ones that most people know because they're most well known. And they're real ugly. Coeur d'Alene. Sure looks like new lows are coming there. And then Hecla really gave up the ghost this week. New lows coming here. And even some of the gold shares that I follow that are a little more spec, like looks pretty vulnerable. Yamana, Lux, almost at new lows. And here's a spec one, a friend of mine who does a lot of mining shares, is like his, it's not liquid yet, but he likes all the insider buying of companies that are, you know, have stakes in this from much higher, and it's gold standard, and maybe you have a chance to spec with it at 83 cents. It's another one of these, you know, right now, trade by appointment stocks, but, you know, it gets down to 80 cents on the weekly. My buddy's pretty smart. I may, you know, buy 10,000 shares or something and see if we could get this one day. So if we had 1.618 of that from here, could go from 80 to a $5 stock. So insider buying.
Hey, ask him about Greenland gold and oil. Greenland
gold and oil. Let me write it down or I'll forget.
See what I don't know if he's seen it. It's a micro stock. They haven't busted ground over there because they haven't got the permitting done yet. But a Chinese company has funded them with quite a little bit of money. It's supposed to be
Greenland land and oil.
Greenland
gas and oil. Natural gas stock.
No, it's Greenland gold.
Oh,
and oil.
Gold and oil. Okay. First comment. Okay, I'll ask him. Paul, anything?
But I don't see that symbol. I can't find Greenland gold and oil. But
Yeah, but I'm looking it up too because
maybe it's
unfortunately
pink sheet.
Greenland. Gosh. That's one of the horrible things with sleep apnea, man. My short-term memory just goes sometimes. I can't remember it.
No, it's okay, buddy.
Yeah, no, I hear you. It's what it is.
Yeah.
wait till
As soon as I remember the ticker, I'll send you a message on it because
Okay,
that's
good.
not right.
All right, everyone.
Great.
Kenneth, you okay? I don't even know if it's here today. All right. Okay. So
you did a great. Thank you, Dale.
All right, Paul. I love
Appreciate you, buddy.
Love you guys. All right, I'll see everyone Monday.
Well, Monday's.
Oh yeah. I'm actually. You're right, Paul. I'm taking the day off Monday. So
Get some sleep.
I don't even have sleep apnea. Or maybe I do and don't know it. A lot of people don't. But yeah, okay. I'm fried. And, all right. I'll see you guys.
Take care, man.
All right, guys.
Bye.
Bye-bye.